Crypto investing, is it a smart risk or just a gamble? You've probably seen headlines of people turning a few $100s into thousands overnight. But for every success story, there are countless tales of people who lost it all just as fast. Today, we're breaking down 7 practical tips for crypto investing, how to approach it wisely, manage risk, and make smarter decisions. Let's dive in. Crypto is high risk. The potential for reward is huge, but the volatility is insane. Never treat it as a get-rich-quick scheme. Instead, allocate a small portion of your portfolio to it. For example, if you're investing $1,000 total, put maybe 5 to 10% into crypto, and the rest in safer investments. That mindset helps you avoid emotional decisions and put all your coins in one wallet. Build a mini crypto portfolio with a mix of assets. Bitcoin or Ethereum is your base, smaller altcoins for higher potential. Some stable coins to hedge risk that way. One bad project doesn't wipe out everything before you invest. Understand what you're buying. Ask yourself, what problem does it solve? Who's behind it? Is it active and useful in the real world? If it sounds too good to be true, it probably is. Check CoinMarketCap or CoinGecko, read the white paper, and see what the community says before investing. Stop trying to time the market. Nobody can. Invest a fixed amount regularly, no matter the price. Example, $25 every week into Bitcoin. It reduces emotion and averages your cost over time. That's how long-term investors win. If your coins are on an exchange, you don't truly own them. Exchanges can be hacked or accounts frozen. Store crypto in a hardware wallet like Ledger or Trezor. Enable two-factor authentication and never share your seed phrase, not your keys, not your coins. Have a plan before you buy. Set profit and loss targets. For example, take profit when your coin doubles or cut losses if it drops 25%. That keeps you logical, not emotional. Remember, you only make money when you actually sell. Crypto changes fast. New technologies, new laws, new risks. Follow reliable sources like CoinDesk or The Block. Learn about DeFi, NFTs, gaming tokens, and new blockchain solutions. The more you know, the smarter you invest. So, is crypto a smart risk or a gamble? It depends on you. If you chase hype, it's a gamble. If you learn, plan, and manage risk, it can be a smart part of your portfolio. Start small, stay consistent, and never invest what you can't afford to lose. If you found this helpful, like the video, share it, and subscribe for more personal finance tips. Invest wisely, not wildly.